time to be this investor, because what it takes to be in the 1%. My next guest fund is beating 99% of its peers year to date, and he says it's partly because he's more focused on fundamentals than on the headlines that we see crossing the wires every day. For more, I'm joined by Marketfield Asset Management CEO Michael Aronstein. He has $2.2 billion in assets under management. Dominic and Josh joining us as well. And Michael, certainly some huge returns that you are providing to your investors over the last year. What is working here for you?
Well, I have a good team, and one of the few advantages of getting old is that experience really helps in this business. I've been doing it for a long time, and I think we're very top down, very conceptual, and we've had the idea over the last year and a half that the U.S. was going to be kind of the safe haven in terms of equity markets, and we're a long short fund, so we've basically been long the United States and short the emerging markets, and that really has worked out.
But that involves stock picking, or that involves fundamental research. You have to identify what you want to short and why, and then what you want to buy and why. So what exactly are you shorting? Are there industries that are evolving as themes, or perhaps on the long side as well?
Well, on the short side, it's really countries and regions and political systems that we've been short. And there are ancillary kind of themes linked to that, particularly the commodity theme, which I think is ending. I think you're at a long-term ending for the whole commodity theme. I think the beginning of the end was in the big spike in oil in 2008. And you spent the last 4 years kind of getting people more excited about it, when I believe the long-term supply-demand fundamentals are changing. The industry, at certain price levels, the industry and the world will provide almost a limitless amount of anything, but it takes time. It takes a long time. It's what we saw in the housing market. It took 3 years, really, for home building to get tremendously excessive to the point where you saturated the demand.
Right.
So at the ends of trends, it's never the demand that goes away, it's the supply hits
that goes
and
away then
stops the price going up.
Mike, I know a lot of investors are counting on more rounds of monetary stimulus from central bankers, from policymakers. So some have moved into gold as kind of a hedge against maybe weakening paper money. But you're short the metal. What's your thesis there?
I think gold has had its day. It's a very good liquidity indicator, gold is. But again, I think you've gone through a period where gold production is going to go up. I think the secondary supply of gold, gold is a commodity that tends to be put in the drawer, the safety deposit box, or the vault. I think there's a price here at which the secondary supply of gold is going to begin to surprise people. And, the argument that it's a suitable currency that actually can substitute for currencies that currently exist, I don't believe. I think currencies are mostly matters of convenience, and in this day and age, with cyber currencies, gold is a very awkward substitute. It really is. You have to move it around. Whereas you could use the Swiss franc if you're doubtful about the dollar. You can select currencies that can then be put into cyber form and moved around the world very, very conveniently, without them becoming stores of value.
Right, without then going into gold. And Michael, just quickly, how are you shorting emerging markets exactly?
We're short a number of individual stocks, mostly in finance and some local commodity producers. We're also short some stocks in the U.S. and Europe that are dependent on accelerating demand particularly from China. And we're short the individual countries, mainly through ETFs.
All right, Michael, thank you so much. Really appreciate you joining us.